Hello and welcome. My name is Miat. In this session, we will be talking a little bit about ETH, BTC, the correlation, how the market cycle works, how news affect the day trades, and also what you can expect going forward with some of the correlations in terms of what's happening in the crypto space and also what's happening with the total market cap in the cryptos. First of all, I would like to start by having a look at the ETH BTC chart. I really find it incredibly interesting that basically what market has started doing since last year, they've been using Bitcoin as a funder to drive ETH higher. And there was a foolproof trade so far for the majority of this year, and to some good extent last year as well. However, what's starting to happen is we're starting to run into some resistance that we saw in 2017 and 2018, which made holding that position a bit too expensive. Therefore, we will expect to see a little bit of a grind and also possibly a halt in this whole trade, and we could see of some of those positions unwind as well. Now, to have a quick look at the total market cap as well, and that is including all the cryptocurrencies, including BTC and ETH. We hit 3 trillion, which was a sort of a benchmark to hit. That was really good in terms of building that confidence and knowing also that the money was there to drive it all the way. Because once we hit 1T, everybody thought, all right, this is good. It's getting really interesting. How much further can we go? And then we hit the 2 trillion mark, and then things started to slow down quite aggressively, but it picked up very quickly because the liquidity push was still there. Once we hit the 3T, and by the way, I've spoken to him about this, hitting the 3 trillion a long while ago, it was well coming. Then the kind of profit taking started kicking in. Mind you, this whole period where we started having this big push higher is when we saw the Federal Reserve aggressively printing money. When I'm saying aggressively, within a couple of weeks in March of 2020, they printed over $6 trillion. So it was a lot of money to do a lot of things with it, and some of those investments found itself in the crypto space. And back then, the whole market cap was really low, so it was negligible. It was less than a quarter of what it is now. Back then, last year, around when the recession happened, we saw that it was just a few billion and a few hundred billions, and then started to see this big rise. So expect a little bit of profit taking, a little bit of a slower move higher, because that big push in money is not there anymore. We need that liquidity to keep finding itself a new home in the crypto space. That's why you see readjusting in some of the altcoins as well, which we won't be talking about in this session. What I really want to focus on is Bitcoin and Ethereum. So we explained about how the market cap works. We explained about how BTC is being used as a funder to drive ETH higher. Now have a look at ETH against Tether on its own. Again, on its own, it started moving really strongly, and at the same time that we saw some resistance happening and some profit taking happening from the total market cap, you're seeing that ETH is struggling a little bit as well. The good thing with ETH is that it is easier for it to go higher because the market cap isn't as matured as Bitcoin is, but you still need that liquidity and drive in the market to be able to achieve that. And in order to be able to achieve that, you need to have a good understanding of who is driving that market and who is interested in actually driving the liquidity back into that market. And I want to take you into many different charts and many different articles to just confuse you too much. Basically, main liquidity provider right now is the Federal Reserve, and they are tapering that liquidity that they're providing. And it looks like by the time they finish their tapering next year, they will have added probably another $500 billion in liquidity, which is still a bullish thing overall. But it means in the short term, there's a lot of rethinking. That's why you see these near to lower highs forming, and possibly we're going to have a tough time. Even if we take out these recent highs, we will have a very tough time staying there. I think everybody's probably more focused on hitting the 5K mark, which is not too far away. Looking at it from the current prices, you're probably looking at another 12% push It's not a lot, but you really need to find that liquidity to be able to do this. And right now it's a bit of a question of if that's really there. And the same thing more or less is true for Bitcoin as well. So if I check that against Tether, you'll find that Bitcoin had a tough time after the recent legs down, had a tough time recovering. It had a bit of a mini flash crash there. It started recovering, and from my experience, whenever I see this pattern, it might mark the low, but it doesn't mark the low in terms of timing. And let me explain that. So you might see that, okay, that price level at 42k will be maybe the low for a very, very long time, but it doesn't mean that price will start moving back up where you want it to be. That means if you buy here, you might find yourself a little bit in this congested area, and you might even come January, you might see that it goes and dips into those areas again to reload higher. So just keep that in mind as we are progressing in the next few months and weeks. And one of the biggest correlations I've always showed when I'm talking about Bitcoin is obviously the US yields, and specifically the 10-year yields. And the reason why I mention it is because the idea behind Bitcoin is becoming more related to invest into something that is a bit more related to inflation gauges. So when I look at the 10-year yield at government bond, you can see the peaks and troughs just beautifully line up. Now, mind you, there's a comparison based on the not on the price movements, as the price movements in Bitcoin are much more violent than they are in the bond market. In comparison, an hourly candle on Bitcoin moves as much as what probably the bond moves in an entire year. You will appreciate, because the bond market is 40 trillion, where Bitcoin has got a much smaller market cap. Be that as it may, I'm looking at the yields to really gauge where Bitcoin is headed in the big picture. The good news is that there's a high chance, there's an incredibly high chance, so right now the 10-year yield is trading at 1.5. There's a high chance as we move into next year that we are going to see the 2% mark, because inflation is being so aggressive. That also means that all-time highs should not be really difficult to achieve for Bitcoin as we are moving into the next year. There's a bit of annoyance as we are in the middle of a very uncertain time, where with yields and also with Bitcoin, with inflation, we have a bit of uncertainty happening. That uncertainty will unveil itself as we are moving towards the end of December. In the middle of December, we'll have the Federal Reserve have a meeting, and they're going to take all those questions marks and all those unclarities that we're still not sure if it's time to buy now or not. That will take that away from us, and we'll have a better viewing of where things are headed. In the meantime, I'm not really interested to leg into the major moves. Again, mind you, the flash crash was a really good place to buy. It doesn't mean from a timing perspective you're going to be good positioned. Maybe you will have to wait here for several months, and it's not going to move out of the 50 to 55 range for a long time before it actually makes a strong break higher. And the same thing is probably true for the yields as well. So to recap shortly what I'm looking at in terms of market structure, we are looking at liquidity to hit the market. We want to make sure there's good liquidity, there's deals being done, ETH is being bought as well, and it's being used in terms of onboarding and the keychains. And also I'm looking at the yields. I want to make sure that the yields are continuously climbing higher to be able to see higher highs and also new all-time highs for Bitcoin, which I believe will be coming. If I have to put a time on it, it will be closer towards February, when I can see yields starting to move aggressively stronger, and also when I see when Bitcoin starts picking up with it. In the meantime, I'm actually, I think you find it more lucrative to sell Bitcoin on an intraday basis to capture some lower moves and maybe fill some of these wicks, as I'm not convinced that move is ready yet to peel off. Now we've covered that. Let's look at a little bit of more cooler things, because that was a little bit more holistic. One of the things I look at specifically when I want to trade Bitcoin, or when I want to understand how much can it go either way, is when I keep a sentiment check on where the market cap is. Where the market cap, it can't move 500 billion at a time. It really moves in like a couple of billions at a time, and in those blocks, and that's when you can expect these contractions and expansions to happen as well. So we were in a period where there was money going out. So if you want to see money going in, I will have to look at the total market cap, and that kind of gives me sort of like the sentiment and also the logic really to feel a confidence. Okay, money is pumping into the market here, I want to be involved as well. So if I were to compare that, again, total market cap, and these things I'm explaining is extremely basic stuff, and as we move along with these videos on a weekly basis, I will get into more details of the more intricate things. But on the basic, you really want to make sure that when you leg into a trade where you feel like, okay, I'm trading with the trend here, that you can see that the market cap is moving in line with you as well. So far it's good, but I think we might struggle a little bit here. Hence I'm saying look for sells in the short term. Another thing I really love doing is when I look at Bitcoin and crypto as a whole really, is looking at different news sources. Now, one news source that's freely available and that I think you should have a look at is Financial Juice, and they have a tab here which says crypto, and it gives you all the crypto and news that is live going throughout the day. Some of them could be really important to certain cryptocurrencies, and some of them will be big price movers for what's it called, for Bitcoin as well, and ETH. So that's one of the things you need to keep an eye on, where you can see a certain for instance, there was I believe there was some news coming out around 2 o'clock my time, and that's when he saw some big moves also in Bitcoin happening over here. So it started a strong leg of about 3 or 4%, which is quite significant. But also from the legacy markets, you will find that there are some news that are relevant to Bitcoin. One of the news that is really relevant to Bitcoin is the US CPI. And US CPI prints once a month, but it creates really juicy moves. And let me show you how that works, and then I will wrap up this video and won't keep you any longer. So US CPI gets printed once every month, and the next one is due on this Friday. Let me see if I can find it here. So US core CPI. Let me actually take you to a different calendar. One is called the Forex calendar, and then we can check the past dates as well. We can just do a quick back test here together as we are going along with this. So on the 10th, 13th, 14th, and 11th of the past few months, we had these price movements at about 1:30 London time. Now I just want to have an unbiased look at how Bitcoin reacted to those moves. So last time we had one of those news announcements was the 10th of November. And 10th of November, 1:30. Let's see what Bitcoin did there. And there was this candle here. So if I were to take the entire range of the candle of the hour, it was again good strong move. And again, take an unbiased look just now. I really just want to see how you can spot volatility, because as a trader, if you know how to spot direction, if you know where volatility is, then you're pretty much making money all the time. The worst thing that always kills traders really being chopped up in these small moves, and it goes up a little bit and then goes down a little bit, and then that sort of thing just eats you alive. Once you have these volatilities kicking market about, that's where you really want to get involved. And you could do many different things. You could be involved in the main push, scalp the mini rallies. You can fade the whole thing. There was loads of other things you could get involved with. So if you think that maybe there was a one-off, then I've got another one coming for you. The last one before that was the 13th of October. We had another US CPI read, and there was again the same time, 1:30. So I'm going to spot to see if I had any movement there, and the movement here was a little bit smaller. Just double check I've got the date right. So it was the 13th, and the movement here was a little bit smaller, but then we had the follow-up move later on around the London fix to cover that. Before that, we had one on the 14th of August. I beg your pardon, September. Let's just find it on the charts here. And again, 1:30 my time, and you saw a not bad move as well, about 1%. But again, you really will appreciate it. You know, you've got expected volatility happening around that specific time, and that is going to be fueled for your trade. So if you're already long, you know you can add here. If you were looking to fade the whole thing, you're going to be able to do that a few hours later as well. We're going to have a look at one more, and then I'm going to wrap this video, and we have where we'll conclude everything. So in August, on the 11th of August, we had another one of those CPI rates. Mind you, that was in the middle of the summer, so liquidity was extremely limited. And at 1:30 we had a bit of a bump, and then the move came later that created for the rest of a move, for the rest of a day. But we had a bit of a bump, probably not as aggressive as we've seen the other days before. Long story short, so you've got guaranteed volatility happening this Friday, 1:30 London time. It will be probably different times in the United States for the US CPI, and it always tends to create some strong moves, and a lot of the times those moves get faded. So you've got a two-way market here to look at, and I'm hoping you find this video useful. What I will be doing in the coming weeks as well is to have more different types of videos explaining different movements, intraday movements, bigger picture, how we look at things, really to bring a bit more logic to trading, and not so you're always stuck with drawing lines and then you're not really sure until those lines really work out for you. In the next video I will probably explain a little bit what's happening around the 4 p.m. London fixed time and how BTC reacts to that. It tends to be incredibly predictable, so I think you will find it useful as well. And until next week, I wish you a very profitable rest of the week. I hope you found this video useful as well. That's it. Bye from me.